2025 is set to be a really good year for crypto, bringing back the bulls of 2021, or even much bigger bulls this time around. In recent weeks, Bitcoin has created multiple all-time highs and altcoins are getting set to explode. This is going to open a new window for wealth transfer, creating new crypto millionaires. So based on extensive research and personal experience, I've compiled a list of the things that you should do to increase your chances of becoming rich in this coming crypto boom. And I should state that this list is in no particular order, just so you know. My name is kachidgolden. Welcome to Proper Insight, where we show you how to make money and build sustainable wealth through cryptocurrencies and other financial methods. Subscribe to our channel as we will be showing you different methods via which you could make money. So without further ado, let's get right into it. So imagine buying some coins and tokens and you're waiting for months. You find yourself waiting for months to make profits, like to even get something decent out of that investment. And someone just invests into what seems to be a random token and makes a whole lot of money within a short period of time. And you're wondering, wait, what just happened? How did this person make so much money within a short period of time? Well, there's something called narrative. Narrative are simply beliefs, stories that shapes how we perceive and interact with cryptocurrency. So for example, the meme narrative presents a golden opportunity for investors to make quick profits, whereas on the other hand, narratives like staking and yield farming presents an opportunity for investors to earn passive income over a sustained period of time. So we now understand how narratives shape our perception of the market and how we interact with cryptocurrencies. So you need to focus on the more popular narratives, as these narratives tend to gather a lot of attention from the markets. So in the last bull cycle of 2021, we saw memes, we saw DeFi, Metaverse, play to earn, and all of these narratives pioneering that bull run. But in this current bull run, we are seeing newer narratives coming into form. Narratives like AI agents. We all know what AI is and how they help us in our day-to-day activities, assisting us in complex tasks and all of that stuff. Then imagine taking it steps further, having AI perform tasks on your behalf, like even trading the market on your behalf and monitoring your portfolio. Stuffs like that are really bullish for the market and the entire financial sector as a whole. Narratives like reward assets are basically physical assets that are tokenized on the blockchain, assets like real estate and commodities, those sort of things. Then we also have narrative like DePIN, which is decentralized physical infrastructural network. We have the DeFi narrative. DeFi narrative is very bullish because it covers a whole lot of sector. In DeFi, we have GameFi, we have yields, we have a whole lot of these protocols that are really profitable and really lucrative. So these are the more popular narratives, the narratives that have a lot of attention from the markets. So you want to be investing in narratives that have a selling point that basically anyone can understand. Avoid as much as possible investing into long green candles. This is a no-no. You shouldn't be doing that. You shouldn't be investing as a result of FOMO, which is basically the fear of missing out. You know how you hear people talking about coins and tokens pumping to Valhalla and not giving you the opportunity to get in. And as a result of that, you just jump into the market at the wrong spot, hoping that prices would keep going higher. But in actual sense, you might just become exit liquidity for those who have gotten in much earlier. Rather, what I recommend you do is get into crypto projects at an early stage, as this affords you the opportunity to acquire much of that token for relatively less amount of money and positions you to make the most out of that investment. So the guy that just made $3 million from a $16 investment 10 days earlier actually got into that project almost immediately after that project was launched. 10 days later, when the coin exploded, he made $3 million from that investment because he got in at an early stage. Citing another example would be that of the guy who made $5.7 billion from investing just $8,000 in Shiba Inu token. So you see how lucrative investing in crypto projects at an early stage actually is. You want to get in early as you are the one to make the most. This is not to say that those who get in much later during the rally won't make money, but in comparison to those who got in at a much earlier stage, you are best positioned to make the most out of that investment. In fact, when you hear about crazy stories of people making millions and billions of dollars from relatively lesser amount of investment. These are the kind of things that produce such stories. One thing these people have in common, the Shiba Inu guy and the Peanut the squirrel guy, is that they both got into their projects at a very early stage. This will position you to make massive gains because you're getting in from the start, and everyone coming after you is literally working for you. Indirectly, they are pumping your bags, and you're making the most out of that investment because you got in before they did. Most people think price tags of cryptocurrencies are what affects the growth potentials of their investments or determines by how much their investments actually grows. But in reality, price tags just affect the quantity which you get. So for example, if you're buying cryptocurrencies with the bigger price tags, say $10 and above, you're going to get much fewer tokens than you would get if you're buying cryptocurrencies with the $1 price tag or way below $1. So you can see that the price tag of cryptocurrency has little or nothing to do with the growth potentials of your investment or that particular crypto assets. What actually affects the growth potentials of your crypto asset or your investment is something called market capitalization, which is the market valuation of cryptocurrencies, and it is derived or gotten by multiplying the current price of a crypto asset by its current circulating supply. Cryptocurrencies are classified or divided into different parts based on their market share or their market sizes. The microcap cryptocurrencies are between 100 million and below. The small cap are between 1 billion to 100 million. The mid cap is anywhere between the 1 billion to 10 billion, and everything above 10 billion is classified as large cap cryptocurrencies. So let's put this into perspective. If you invested in cryptocurrencies at say a $10,000 market cap and it goes to a 1 billion market cap, that is 100,000x which you've just pulled in. If you invested at a 100k market cap and it goes to a 1 billion market cap, you've pulled in a 10,000x. If you invested in a million market cap and it goes to a 1 billion, you've pulled in 1000x. If you invested in a 10 million market cap crypto and it goes to a 1 billion, you've pulled in 100x. And if you invested in a 100 million market cap crypto and it goes to 1 billion, you've pulled in a 10x. This simply means that the lower the market capitalization of the cryptocurrencies you invest in, the more potential for price gains, because it is way easier to make a whole lot of profit in percentage terms on smaller cap cryptocurrencies than it is to make on larger cap cryptocurrencies. So for example, pulling in just 100% on Bitcoin from its current price level would require hundreds of millions, even trillions of dollars, whereas pulling in same 100% on a small or micro cap cryptocurrency would require basically just a couple $1,000s, and this can happen within minutes or hours. So smaller cap cryptocurrencies are more volatile. They present that opportunity for massive gains. Yes, they are a lot riskier compared to the more established cryptocurrencies, the larger cap cryptocurrencies, which are more stable and more established. But when it comes to, or when it has to do with making a whole lot of profit, especially if you have limited funds, if you don't have a lot of money to invest into the crypto markets, but you want to make a lot of money, you should be considering investing into small and micro cap cryptocurrencies, because these are the kinds of assets that can pull in significant profits, that can pull in the kind of gains that could turn a $10 investment into a $1 million profit.
Try as much as possible to avoid the mistake of investing in just one single cryptocurrency, as this is similar to putting all your eggs in one basket. This would expose you to way more risk and could endanger you losing all your money if anything should happen to that particular cryptocurrency, even if the entire crypto market is rallying. This is why you want to diversify your investments, but you have to be careful not to overly diversify your investments, as this could prove problematic. So I typically recommend you invest into say 10 different cryptocurrencies or 15, and if you're feeling really generous and you have a lot of capital, you could go to the 20-ish. You know what I mean? So one of the advantage of investing in way lesser amounts and not having your capital spread too thin is that it makes it easy to keep track of your portfolio, to monitor every single cryptocurrency within your portfolio. And another advantage is that you utilize the concept of less is more. So I'll give you an example. We have Bob and Obi. Both of them have a capital of $1,000 and they go investing. Bob buys up to 100 different cryptocurrencies and Obi buys just 10 different cryptocurrencies. And they have similar cryptocurrencies in their different portfolios. One of those cryptocurrencies they have in their portfolio pumps 1,000x. They've both made money, but one has made way more money than the other. Because Obi has 10 cryptocurrencies in his portfolio, he's able to allocate 10% to each of those cryptocurrencies. Whereas Bob, on the other hand, has up to 100 different cryptocurrencies. So he's just able to allocate, say, 1% to each and every one of those cryptocurrencies. And because he has just 1% in that particular crypto that has pumped 1,000x, and Obi has 10% in that particular crypto, Obi is definitely going to make way more than Bob would make. So my advice is that you shouldn't spread yourself too thin. You shouldn't invest in too many cryptocurrencies, as they are just going to make it more difficult to manage your portfolio, and you're not going to get the best out of your investments. You're not going to be able to maximize your investment and get the best return. You've considered popular narratives, you're invested in local cryptos, you're properly diversified. Now it's time to take profits of the market. This is the most important aspect of everything. A lot of people tend to miss out on this particular aspect. People tend to invest in cryptocurrencies, make a whole lot of money, and then lose it just because they fail to take profit as at when they should. This is why you need to have a plan or a strategy as to how you intend to pay yourself before you even go into those investments. Before you go buying cryptocurrencies, write down a plan or have a strategy of how you want to be taking off profit from the market. Remember that profits not taken are not really yours. Even if you can see them, you still need to take in those profits. There are different methods and strategies people employ when taking profits. So, depending on your personality and some other factors to consider, you should come up with a strategy or a plan that is unique to you. For example, someone who is more financially stable and has more appetite for risk tend to play the game a lot longer and take profits less often than someone who is financially unstable and has less appetite for risk. What I recommend is that you take off profit from the market progressively, as this helps you maximize your investments. Avoid taking off profits all at once, as this could prematurely take you off the game, especially during bull runs. So you could come up with different strategies or methods. Some methods or strategies you could apply are the personal milestone method or the psychological level methods. For the personal milestone method, you could invest an amount of money and take off profits. Say if you make 100% gain on that capital, you could take off the capital or some percent of the market. And say you make another 10x, you could take off 20%. You make another 100x, you could take off 50%, progressively increasing your profit take of the market. When it comes to psychological level methods, what are psychological levels? These are simply levels that cryptocurrency, the markets in general, react to once they get to this level. And these are also levels that other investors are watching to take profits at. These would be levels like the 1 million cap level, the 10 million cap level, the 100 million cap level, even the $1 billion cap level. What I recommend you do is that you take profits a bit before the market gets to these levels. Say you get into an investment and the market cap is approaching a 10 million cap level. I recommend you take profits as at 9.8 million or thereabouts, taking profits a bit earlier than everyone else, because when the price gets to those levels, the market reacts from those levels and you might not be able to take profits from those levels just before the price falls. Focusing on popular narratives, getting in early, investing in low caps, properly diversifying your portfolio, and taking profit progressively will significantly increase your chances of becoming a crypto millionaire. However, I recommend you do your research as cryptocurrency investments are risky. If I omitted anything, feel free to leave me a comment and I'll throw more light on it. Thanks for watching and see you in the next one. Subscribe.